Taylor Mckenna, CFA analyst covering materials at Kopernik Global Investors. Good morning, Taylor.
Good morning. Thank you for having me again. It's great to be here.
Yeah, welcome back to Benzinga. So, Taylor, over the next 15 minutes, I'd like to discuss about your valuable insights on the mining industry. And let's start, I would say, with the first question. Could you give us a brief outlook for the metal commodities market? And in addition to that, can you tell us more on which metal you are currently more bullish or bearish on, and how this perspective is reflected in your stock picking activity? Thank you.
Sure. Well, thanks for having me. And I think if we take a step back and just look at some of the capex that some of these major mining companies are spending currently, they're at historically low levels. So if you adjust for inflation, companies like BHP, Rio, Newmont are spending capex dollars at an 80% level that's lower than they were 10 to 15 years ago. So because of that, we see some serious supply constraints moving forward across different metals. And for our portfolio, what's really exciting for us as value investors, we have a big exposure in gold and secondary in copper and platinum group metals. But what's really exciting for us is these valuations that we see with these companies are extreme. So if we go back in time about 10 to 12 years ago, gold, copper are flat to higher. Many of these mining companies are down 50 to 80%. So we're buying gold and copper in the ground at extreme discounts relative to what we think they're worth. Many of these companies, certainly the ones in our portfolio, do quite well at current spot prices. But if prices do increase, which we think is likely due to some of the supply constraints that I just discussed, we have huge optionality to higher prices. And let me just give you one example, if that's okay. If we use Newmont Mining as an example, going back to mid-2022, since that time, gold is up about 10%. Newmont's down 60%. You may wonder, well, maybe they've destroyed a lot of value. Actually, we think it's quite the opposite. Last year, they purchased Newcrest Mining. We think that was a steal. So our valuation for Newmont has actually increased while the stock is down 60%. And currently, you can buy gold in the ground at the largest gold producer with the longest mine lives for under $200 an ounce. This is an historical discount, and we're very happy to take advantage of this currently.
That's absolutely incredible, actually. So valuation here are getting, I think, irrationally cheap, right? Are we talking about single-digit PE for the broader industry? Can you tell us more about the industry valuation here? And because I mean, we met 8 months ago, and we were discussing about the same issue. About the cheapness of the industry, but we haven't seen a positive price action thus far. And my question here is that are we at an inflection point now that we prepare for Federal Reserve interest rate cuts down the road this year?
We believe we are, and as fundamental value investors, we don't try to guess what the Fed is going to do or what interest rates are going to do. We buy stocks that we think are undervalued based on fundamentals. And when the tide changes, it's always hard to predict. But we think, again, when you're buying companies like Newmont Mining for under $200 an ounce, when even you add lifting cost and then a margin on top of that, it's still well below the current gold price of $2,000, that eventually investors will wake up to this. I will also point out that these large producers are largely net cash, so there's not a lot of debt in the system. They've cleaned up their balance sheets. So when you look at the whole picture, you can really take solace in the fact that you do quite well if prices stay where they are, but you have a huge exposure to the upside should prices increase. When the tide shifts, hard to understand, but that's not something that we do as investors here at Kopernik.
Got it. Let's shift our focus now to China and copper. Now, last year, China had a very sluggish economic growth, ongoing challenges due to the domestic property crisis. What's your outlook there for 2024? And can we anticipate a rally in cyclical commodities such as copper or aluminium as Chinese activity rebounds?
Sure. Yeah. Going to copper first, again, some of the things I said earlier, the scarcity, there are just not new copper projects being developed or found. So there's been about 200 large-scale copper projects found since 1990. Only 10 of those have come since 2010, and actually 0 in the last 3 years. So there are not new copper projects being found. And then on top of that, the time it takes for a mine to be found, for the resources to be found in the ground to get to production has gone from about 8 years, 20 years ago to 15 years is now the new average. So over the long term, as some of these mines that are in operation today mature and come offline, there needs to be new supply, and we just don't see that happening with copper. And there are some mining executives out there that think copper has to double in price to incentivize some of these large undeveloped projects to be developed. And that would seem to make some sense to us. And as far as what's going on, as you may be aware, copper is a green metal. It's going to be part of the green revolution. So as the West likely expands their need of copper while China may decelerate, that may work itself out, but the supply constraints moving forward probably outweigh some of the concerns in China.
Nice. Let's talk about AI. So AI has been like the major theme driving the stock market performance over the past year. We have seen some industries such as semiconductors essentially skyrocketing. In your opinion, what materials right now and then which company could emerge as a crucial suppliers for the AI industry? Tell us more about this particular angle.
Sure. I mean, it is quite fascinating. We're at a point in time where I think all of the Magnificent Sevens individually, the market cap is higher than the entire metals and mining industry, all of them individually. So it's at a unique inflection point from that perspective. As far as AI, I mean, AI can really actually help the mining industry. So as you are aware, the mining industry can be very dangerous. There's safety and health concerns, and there's instances where AI has been able to predict some problems before it actually happens within mining. And we would expect that the AI to grow as a solution for the mining industry. As far as metals that could help the AI in software and chips and all of these things that power AI, there are metals and mineral content in them, such as silver, and in even some cases, platinum group metals. So as those expand and the AI uses of these expand, the amount of metal that goes into AI should increase over time.
Interesting, absolutely. So one more question. Can you tell us, your 3 favorite stock pick in the sector?
Sure. Well, I gave you one Newmont already, and I think if we can expand that even further, Impala Platinum, which is the largest platinum producer in the world, is down materially, as many of the platinum group metals are. We think this is unsustainable. Platinum historically has traded on a 1-to-1 gold ratio to the price of gold. It's currently 50% below the price of gold right now. Impala has the largest reserves in the industry. Their net cash, and we think moving forward, this is a huge opportunity to own the stock. Many people are concerned with the platinum group metals about the deceleration potentially in internal combustion engines. We think that this is possible. We incorporate this into our analysis. For all of mining, we need a big margin of safety. That's certainly the case with Impala for some of these risks. However, there's a huge runway until internal combustion engines move out of the market, as well as hybrid vehicles, which should gain market share going forward, along with EVs, actually use a higher PGM content. So there's opportunities for the PGM metals to grow. And then outside of autos, platinum is very instrumental in hydrogen fuel cells. So if that continues to grow, that's a huge opportunity. And many of these platinum producers, Pollock as well, is trading below what it costs to produce. So when this happens, usually the metals react, and perhaps what we've seen the last couple of days are signs of this. All in all, you're buying platinum and palladium and gold in the ground for under $100 an ounce at Impala, which is a huge discount to the historical cost. And we think that it's a huge opportunity from here. On shifting gears a little bit, going to more of a development project, there's a company called Nova Gold, which owns the largest primary gold undeveloped asset in the world, called Donlin. That's in Alaska. This is a project that's fully permitted and is ready to go when the right opportunity arises for the company. Nova Gold owns 50% and Barrick Gold owns the other 50%. So this is a project that likely gets built. It's also very high grade, and the stock is down materially over the last couple of years. This has a very strong management team, a good shareholder base. So we think as gold likely moves higher in the future, being the largest undeveloped gold asset with 40 million ounces will do quite well.
Thanks, Taylor. Now, before turning to our next discussion, the last question: can we expect a turnaround in earnings to occur starting from Q1 2024, or we need to wait some more quarters here?
Yeah, it's hard to say, but what we are seeing is certainly, if you look at some of the largest gold producers, the cost pressures have subsided a bit, and actually they're not increasing to the extent that they were previously. So Newmont and Barrick have come out and suggested that their all-in sustaining cost for 2024 should not be materially higher than 2023. Again, that's not something that we like to forecast, but that's what the companies are saying. Once we see higher prices, which we think should happen in the future, then we expect them to earn more than they do now. But to answer your question, we don't expect cost to increase materially, at least this year.
Great. Thank you so much, Taylor. It's been an insightful discussion, and I hope to see you again at our Benzinga event in the future.
Thank you so much for having me.